All right, in this video, we're going to be doing a run through on the S&P 500, the Dow Jones Industrial Average, and both Bitcoin and Ethereum. So let's jump right into it. The S&P 500 printing the bullish divergence that we've been actually talking about for about 3 weeks. December 20th, it became very obvious once we lost this level, this support level in RSI, but we're still well above the last local low. We talked about how this was extraordinarily likely to print bullish divergence. Otherwise, we would have had to have a huge sustained crash. And we just didn't feel like that was the most likely scenario. Now we've broken through our key margin pressure level zone here around 38.50. And what I think is next is going to be a retest of this 4K level. I do think we'll probably pop back up to this downtrend line in the S&P 500 where we do get more resistance at around $4,000. And that is going to be a very important level for obvious reasons. It's our downtrend line. If we can break through our downtrend line, break above $4,000 and make support on top of it, all of a sudden we have a bear market rally on our hands. Okay. And again, I'll keep saying this over and over again. I do think that January, February, and even into March, we could get this Q1 rally and then get recession later on in the year. Everyone's talking about recession. However, it may be delayed. A lot of times the market does not even top out until the Fed decides to pivot, right? And the Fed has not even designed or not even put a pivot into the works for 2023. They're not even planning on one yet. I think they will probably have to, but we'll see. So we can absolutely rally here, but we need to be aware that this is huge resistance. I actually think this would be a really great place to go for a short, around $4,000 in the S&P 500. Moving to the Dow Jones Industrial Average. So just to recap here, we did have our bearish divergence up here. Bearish divergence. That's part of what signaled this correction, this recent correction that we've gotten. But we have now printed massive bullish divergence on the daily here. So this low to this low versus this low in RSI to this low in RSI. That is very pronounced bullish divergence in the Dow Jones Industrial Average. And I know everybody's bearish right now. Everybody's bearish, but the charts are saying otherwise, and they have said otherwise for the last few weeks, right? And we're seeing support on top of our downtrend line at a level where we have our 5x long margin pressure level. To me, the most likely next scenario is a retest of this 4x long level and these prior resistance points that we've already put in. So if we get a continued sustained rally into the next week or two, 34,850 looks fairly likely. Now, what's interesting is not only is that a bump and run off of our downtrend line, not only have we printed bullish divergence, making that scenario very likely, if that scenario occurs, look what's completing. That's completing an inverse head and shoulders, which could carry us up even further, dare I say, to new all-time highs in the Dow Jones Industrial Average. Right? These markets are very volatile right now. Yes, they're very volatile to the downside. And yes, we're planning for recession. We expect recession in 2023. But we're in Q1 and the Fed has not planned to pivot yet. There's tons of data that would support the idea that we can go up and see a rally before we do crash into recession. Right? So be aware of that. Now, this would actually be a level that you may want to consider shorting. I know that would complete the inverse head and shoulders, but it's still a resistance level nonetheless. So pay attention to the Dow Jones Industrial Average and don't get pigeonholed into thinking that we can't go up before we go down, right? Just because we got recession on the horizon doesn't mean it has to be a straight shot down there. Look, it has not been a straight shot. Look at the Dow Jones Industrial Average. We saw a really bad bleed off, and then these rallies have been absolutely violent to the upside, and we could certainly get another leg to this rally. So we can be volatile to the upside. We can be volatile to the downside, regardless of what we're expecting later in 2023. Now, Bitcoin breaking through our key margin pressure level, taking the local high here at 25.2K, our last swing high. That's where our shorts are wanting to hide their liquidation points. And that's where we've seen this battle for 16.8K manifest based off of that margin pressure level. You can no longer short on 2x leverage and hide that liquidation point above that swing high of 25.2K once price goes down below 16.8K. And that's where those shorts are really running out of steam. They're really running out of steam. Why? Because we've put in the low here. They can no longer short on 2x leverage and hide that liquidation point. And they're shorting for what? Shorting into a demand zone, right? And again, yeah, there's Bitcoin miner capitulation and all of that. And maybe we go up and ding 18 or 20K and then fall back down. But right now, when Bitcoin drops below 16.8K, the shorts are getting so little potential reward for so much risk of getting squeezed out of the market, especially when the S&P 500 and the Dow Jones Industrial Average are moving up. So I actually do think that there's scenarios where we could see crypto. A lot of stuff is already short squeezed. You've seen Solana short squeeze. You've seen Near Protocol short squeeze. We're seeing like even low cap altcoins that are traded on leverage short squeeze. Like look at Gala, look at some other stuff. They're getting short squeezed because shorters have been piling in for so long, and now all of a sudden the market's turning up a little bit. The S&P 500 is looking a little bit better as of Friday. And late in this week, shorts are getting squeezed out. So we could definitely see a little bit of support here and then go up to test some of these levels. It's unclear how high Bitcoin can or even will go. But this is our key level. We got a lot of congestion starting here around 18.1K all the way up to 21K. So timing this exact top of where Bitcoin's going to find resistance is unclear, but just note that it's got a lot of work to do if it's going to break through 20 to 21K. So I would expect it to get caught up in this zone between 18 and 19K, which is honestly a lot more bullish than what most people probably are right now. But I do think we can go up and test some of these prior support levels as resistance on the way back up. Ethereum looking very solid, starting to climb back upwards a little bit, breaking through 20 or 1260, making support on top of it. This is actually what I would consider to be a long trigger. I think the most likely scenario is that we take a trip up to 1340. Now, 1340 is a very contested level. A lot of resistance converges at 1340. We've already seen it manifest, but we continue to build resistance at 1340, as we've seen from these new lows that we've put in, puts even more resistance at 1340 to 1350. So beware of that level. If you're looking for a short, I think 1340 is a great level to short. And I say that as somebody who's very bullish in the long term on Ethereum. Just the technicals. Again, the same thing with the Dow Jones Industrial Average. I'm not going to sit and tell you that the technicals look bad when they actually look good. And I'm not going to tell you that there's no resistance at 1340 just because I like Ethereum in the long term. No, there's a lot of resistance at 1340. We've seen it hold multiple times. So just because I'm bullish biased in the long term for Ethereum doesn't mean I'm going to ignore the fact that we do have a lot of resistance there. Now, that would set us up for a really nice potential. And it may even complete because technically we have gotten 3 touches here. Normally you look for 3 touches. These 2 were very back-to-back consecutive, but that could set us up for a nice bounce over in this region. Something like this, and that would be a bullish ascending triangle, which is a reversal pattern, or rather a bullish pattern to the upside, right? So keep in mind, though, I would want to see us break through 1340 and take out a lot of this liquidity up here, make support before we get too bullish to head up higher. But the stage is set for a bear market rally. Does that mean that we have to have one? Does that mean I'm saying we're 100% going to have one? No, I'm still saying the same thing I've been saying for the last 2 to 3 weeks, really probably longer, but especially emphasizing in the last 2 to 3 weeks that the stage is set for a higher probability of a bear market rally than not. And we're starting to see that thesis develop here as we get further and further into January. So that's your nightly recap. Apologies if you were tuning into the live stream earlier. I had technical difficulties, so decided to just launch this video instead. Hope everyone's having a great weekend. All right, catch you next time.